Let's talk rock climbing. Let's talk rock climbing.
What's a good stock to do that?
Because they climbed the cliff, the mountain yesterday, and now the rope broke for Cleveland Cliffs. Now, I didn't have you call in yesterday
it's all good.
when the stock was up massive.
I'd rather do it today.
No, I would too.
Yeah, but for different reasons.
No, well, I knew you were coming on. I knew you were coming on today.
It's better to do this now when the stock is down.
The critics, if you want to call it, they're saying, okay, the stock was only up because the CEO talked about rare earths, which is like talking like AI. You just say rare earths.
Right.
And the stock goes up, and now the street sort of caught on to that and is like, all right. And today it got downgraded to underweight. After what Wells Fargo calls excess exuberance.
Okay.
And now here's the stock down big today. What's the story here?
The story is changing. Leave rare earths aside, okay? That is not what excites me, but the narrative is changing here. 6 months ago, this was a company in trouble, highly levered balance sheet. They had just bought a Canadian steel company that was now facing dramatic tariffs, okay? The narrative is changing in many ways, and rare earths is very low on the list for me. Number one, auto demand is picking up. They've just signed contracts with all the major OEMs at favorable prices for the next 2 to 3 years. And we see what's going on with GM today. I don't know if we'll get to that, but we see what's going on. Auto production is going to pick up, and that's 1/3 of their business. Probably more important than that is they've signed a memorandum of understanding with an international steel company that wants to leverage idle assets, idle plants at Cleveland Cliffs.
Wells says that's an overreaction in the name.
I disagree, and that's fine. Wells is, everybody's going to have their opinion. The details haven't been released. In the press release for the earnings yesterday, it was called highly accretive. Now, look, I like the way that sounds. But either way, the story has changed, and you can see it in the share chart. If you look at 1 or 6 month charts, this stock is clearly climbing. A month ago, the 200-day moving average peaked up. Now, listen, I'm the fundamental guy. I know, Scott, I'm not the technical guy, but I do pay attention. The 200-day moving average is now going up. The 50-day is soaring. And frankly, all today is doing, from a technical point of view, is filling a gap that formed yesterday that needed to be filled. That's why I'm happy to talk about this today. If I'd been talking about it yesterday, I would have said, hey, you got to be in the stock. And then we would have had today, and I would have looked like a dope, you know. But I think this is the right price. And I'm actually going to buy some more for myself personally right now. Okay, nothing dramatic about it, but I didn't want to do that and then start talking it up. So here we go.
You're buying it right now?
Yes, sir.
All right, you let your fingers do the talking.
While you buy it, can I ask you a question without you getting upset at me?
Do I ever
No
get
guarantees.
upset at you?
No
do
guarantees.
I get upset with you?
From an outsider looking in, you could make a strong argument that U.S. steel prices are maybe artificially inflated because of the tariffs. You could make that argument.
Yes.
Okay. But they are elevated for sure. They are elevated for sure.
Bring it.
So why is it that the company keeps reporting negative gross margin? I don't get that.
Well, the EBITDA is positive. That's the good question. The profitability margin that I look at, and most investors in Cleveland Cliffs are going to look at, is EBITDA. EBITDA came in better than expected yesterday. But I think there's an underlying question of, are tariffs real? Are they going to last? First off, the company thinks that they will from a national security point of view. And buttressing that, they just signed an order with the Department of War, that's what we call it, for $400 million of grain-oriented electrical steel that will be produced over the next few years. Here's the important part. It's for a stockpile. It's for a national strategic stockpile. That's where the country is right now.
Do we need that?
Hey, wait a second. I'm not going to answer that question because it's irrelevant. We're doing it, okay? And you know it. This is not my choice. It is the presidential administration's choice that we are going to be stockpiling critical national minerals and metals, of which they've already started with Cleveland Cliffs with this $400 million order.
Okay. All right.